DST Investments is a registered investment advisor which provides real estate investment advisory consulting services on 1031 exchanges and Delaware statutory trusts, which are most commonly known as DSTs. Our firm is regulated by the SEC, and as advisors in the DST consulting area must serve as fiduciaries to our clients, which also means that we don't work for commissions but represent a client's interest foremost. As an asset class, we love real estate due to its ability to provide investors tax-favored cash flow, the potential for capital appreciation, tax advantages, estate planning, and overall wealth-building benefits. Worth mentioning also is that real estate, as an asset class, has demonstrated low correlation to the stock market, so overall it is an effective way for investors to diversify investment portfolios to reduce volatility and market risks. Today, in this short video, we shall review the basic elements of what a DST is and how it can be used either as a cash investment or as a solution for those seeking a 1031 replacement asset. We will also discuss how DSTs are offered to investors, who must be accredited to meet suitability requirements established by the financial regulators. So, what is a DST? A Delaware statutory trust is a separate legal entity created as a trust under Delaware statutory law and allows for co-ownership structure under which multiple investors pool their funds to own one or more entire real estate investment properties. Minimum investments are typically as low as $100,000, meaning a single investor potentially may own an undivided fractional interest in a portfolio of real estate properties and participate in a pro rata share of its net income, tax benefits, and growth. Many high net worth cash investors have learned the benefits of placing their cash into a DST investment for income, appreciation, and their unique underlying tax benefits. But most DST investors utilize an Internal Revenue Code, Section 1031, known as a tax-deferred exchange. A 1031 exchange allows investors to defer capital gains taxes and avoid depreciation recapture by reinvesting the proceeds from the sale of investment property into one or more replacement properties within a DST vehicle. With a DST, investors may also gain additional property diversification, are relieved from active management, all the while maintaining the inherent capital appreciation and tax benefits of real estate. It's that simple. Tax deferrals can be continued through as many exchanges as the investor wishes with the step-up in basis to the investor's heirs. Accordingly, a 1031 tax-deferred exchange may potentially be used as a powerful wealth-building tool. A professional tax advisor should be utilized to ensure that every requirement of Section 1031 is met. 1031 investors are often rushed by the timing of their transaction, thereby making it difficult to gather enough information to make a suitable decision. At DST Investments, we open the door for our clients to replacement properties and sponsors identified through careful due diligence and research. In addition, due to lower minimum investment requirements, our approach allows both cash and 1031 investors to diversify into a portfolio of properties consisting of different asset classes, tenants, and geographic locations, all without ongoing property management burdens or financing obstacles. In a 1031 transaction, don't overlook the timing aspects, which, if not followed by the strict IRS timetables and rules, will cause a taxable event. A qualified intermediary is a critical partner in the process, so contacting us as soon as possible is important to protect the real estate investor from taxation. DST offerings are structured and offered as securities under the Securities Act of 1933, which requires the investor to be provided with a private placement memorandum, or PPM. The PPM discloses various risks, fees, and expenses associated with the 1031 exchange and a DST investment offering. The PPM will also outline that potential investors must be accredited, which means they must have a net worth of $1 million or more, not including their primary residence, or have an income over the last 2 years of $200,000 for an individual or $300,000 for a couple. Businesses, trusts, and other entities may also qualify as accredited. Accordingly, the investor can now enjoy the best of both worlds: the disclosures of a security, and the tax advantages of real estate. This video is not a complete explanation of all 1031 scenarios and does not contain all the details of any particular DST investment. As described previously, those details would have been outlined in a private placement memorandum. please let us know how we can assist you. For more information on current DST opportunities, or if you are within the 1031 identification process, please contact us as soon as possible to review your situation and financial objectives. Thank you for listening.